And our markets are a little jittery. We've come off a tad bit from the high point of the day. We had both our technical analysts telling us that, this market is very much in an uptrend. But for the time being, let's see how our, European markets have opened up. Let's get all three of them up for you on the screen. And the initial tick is coming in there. It's either more or less flattish with a bit of a positive bias. So at least European markets, well, more or less flattish. And I think the bulls will take that. The problem, though, for the bulls today is the Nifty Bank. Now, that had opened up with the gain. Yesterday, remember, it's seen a sharp correction of more than 200 points. Today, it opened up well in the green. From the top, the Nifty Bank is seeing some selling. And there are quite a few stocks today. There's no real place to hide, actually, today. Axis Bank, ICICI Bank, both of them under some pressure. And coupled with Reliance Industries, you're in for a bit of a knock on the Nifty on the back of that. What's doing well today? Some of these metal stocks. Tata Steel has moved higher now. Hindalco has moved higher. There's optimism because if China trade negotiations actually throw up a good output, then it's good news, particularly for the globe on the whole, as well as for metal stocks. So that's why some of these stocks are moving higher as well, Ekta.
Yes, absolutely. So as of now, we have a couple of these commodity stocks, like you mentioned, which are moving higher. But let's shift focus now to one of the big triggers for the global markets. And the latest on the US-China trade talks, US President Donald Trump says that a trade deal could in fact be announced soon enough. Listen in.
It's got a very, very good chance of happening. I think that it will be great for both countries. But it will be a much fairer deal for us because over the years we've lost a lot of money to China. China's done very well, and I don't blame China. I say it all the time. I don't blame China. I blame the people that sat right at this desk.
Well, on to a CNBC exclusive then. Ruchi Sharma, Morgan Stanley Investment Management, talks about the state of the emerging markets, his top picks in the emerging market space, as well as his global market outlook. Let's listen in.
It's been a completely lost decade for emerging markets. Emerging markets are still well off their all-time highs, which were set back in 2007 in dollar terms. So yeah, we have had a nice tactical run out here, but that's again happening because the Fed has sort of gone on hold and global markets in general are up. But for the big picture is this, that whereas the US stock market has tripled in value over the last decade, emerging markets have given you exactly zero return, and that's very disappointing. But looking ahead, that could be the opportunity. I think that the emerging market index today is extremely distorted. There are three countries there, China, Korea, and Taiwan, which account for 60% of the entire index. I think that's a big distortion. So there are a lot of smaller and mid-sized emerging markets which have got neglected in this washout we have had for emerging markets over the last decade. So I would personally favor putting much more capital in those neglected countries, what I call the anti-bubbles in the emerging market trade.
Okay, so that's the global opinion coming in. For the Nifty, it's not much of a movement which is coming in. Maybe a couple of these mid-cap pharmaceutical stocks seem to be gaining. So Advanced Enzymes is also up around 4% at this point. We have Newland Laboratories that we pointed out is up around 4%. Merck, Shalby, a couple of these stocks, Loris Laboratories, which seem to be doing well as well. So that's from the broader markets. We'll take a break now. But up next, we have an interesting analysis coming up.